What is going on, everybody? Today we're going over Bank of America, company that Mr. Warren Buffett bought $2.1 billion in the last couple of months. We're gonna find out why, if it's fair value according to Warren Buffett, and the price that he would buy. I assume he already bought like at $20, now it's $28. We're gonna find if it's still a good value to buy today, long term. Warren Buffett Excel, and see what we need to see in order to find the fair value of Bank of America. I'm in the Excel how to value a stock like Mr. Warren Buffett. Basically, you can read Benjamin Graham, the Intelligent Investor, and make this own formula for yourself. You can use this Excel for profitable companies only, where the earning per share is profitable. I'm learning a lot about how to do a discounted cash flow. Just a side note, discounted cash flow for all the IPOs and all the hot stocks that don't have any revenue, how to exactly value them and find the fair price, which most likely you will guys see. So that's a good time to hit the subscribe and bell notification. I will do Palantir, Neo, Helion, Workhorse, all those stocks that don't have any sorts of earning but still growing like crazy because, well, Wall Street bet on Reddit, YouTube pump and TikTok pump. Side note, let's get to our main focus of the. In this Excel that you can get a copy down in my description in Patreon, we need to find a couple of things: EPS, earning per share, and growth. So both of those items we're gonna go to Yahoo Finance and put those numbers in. So let's go. Okay, Bank of America and Yahoo Finance currently around 28.50, pretty high compared to a couple of months ago. We can see 52-week range was from $18 to 35, so we still have like 30% upside. That's not bad. According to Yahoo analyst, it's fairly value and you can have like 3% return, so I assume they think it's like cap. We got ourselves 250 billion. That's that's a lot. Let's see what else we got. PE ratio is 14, meaning that it will take you about 14 years. That's average. That's a good number. 14 years to double your money. So it should trade at 60 in about 14 years from now, give or take. If there's no earning growth, if nothing happens and they don't add any more customers, no one opens a checking account, credit card, nothing, then and only then it will take you 14 years to double your money. Tesla is 1,100 years. Zoom is like 300 years. So just something to think about. 1 year target basically is where we are now, like 29.50. From here, ex-dividend is basically we just passed that. Dividend of 2.5%. That's not bad at all. Earning is fine. We already did the earning. We need this. We are looking for this. Earning per share trailing 12 months 2.03. Taking this number. Second number that we need is in the analysis tab. The analysis tab all the way down, growth estimate, it's pretty low, 0.19. Next 5 year per annual. In Yahoo Finance, guys, I'm clicking here, finance. We're gonna read financial statements for beginner. So you will see it's not that hard and you can read for any company that you own or want to own and see for yourself instead of listening to TikTok people telling you that Neo will go to the moon. Let's start. We got 3 options here: income statement, balance sheet, cash flow. We're gonna look for a couple of things that Mr. Warren Buffett is looking for before he actually makes a buy. And because he made a buy, this company, Bank of America, is very interesting to look. Because I don't have a right number, I'm gonna look right here, 83 billion. First, you look at total revenue. You wanna glance that you wanna see like a growth. So between 2016, 83 billion, 87 billion, 91 billion, 91 billion, 87 billion towards Corona. They're growing. This year they got hit pretty hard. Basically, credit losses provision. This is like, I assume people didn't pay mortgage or provision and credit card defaults. Just they lost like 12 billion from that. But that's not the ratio that I'm looking for. This is just look at this. They lost $12 billion just from credit losses provision, compared to 3 billion a year ago. That's like 4 times more losses. They're gonna get it back. Don't worry, Bank of America is not. Let's see what we need to find. This rate, yeah, diluted net income available to common stockholders, 18 billion. Okay, we're gonna look to see that's the net income. That's like the net proceeds after everything, after they pay everything. So we got 16 billion, 16 billion, 26 billion, 25 billion. In the last 12 months, we got 18 billion. So Warren Buffett would like to see a net income of a company of 20% and up. If it's 20% and up, he said in all his letters, not all of them, he said in a couple of letters, that they can scale. If you make 20% net, meaning you invest $1, you know for a fact that you will get $1.20 back. And then you can expand, maybe branch out, open more Bank of America branches all over the country. You know what? And that's what they did, I assume. So let's find the ratio. You're gonna get a calculator. I'm putting this number 18,013, 18 billion net income, divided by the total revenue, which is the first number, 87778. And I'd like to see a 20% and up, not me, Warren Buffett. And he bought this company, so they better have 20% net. Let's click enter. Yeah, that's no surprise there. 20.5% net. So for every dollar they invest, they get $1.20, $1.20 and 50 cents. Not bad. For a bank, that's amazing number. And that's all you need to look for in the income statements for a bank. We don't have a gross revenue because they don't sell stuff. It's not Walmart. They don't sell grocery. It's not shoes that they sell like Nike. They just, it's a bank, you know, that you bring them $1,000, put it in a savings account. A year later, they give you $1,000 plus $5. Then you pay 15% tax on that $5. In the meanwhile, they take that 1,000 and they leverage that to 10,000, and then they give someone a credit card with like 19% interest for $10,000, and they use your money very, very nicely. Let's go over to the balance sheet. This is something very impressive, guys. I have not seen a company yet that the only one that I saw was Berkshire Hathaway. I will link at the end. That have over $1 trillion, over almost 2.5 trillion in assets. That's like every other American person just put his money in a savings account or a CD. That's not, you can leverage your money, but a lot of people trust Bank of America, and that's fine. You know, a lot of people don't like to put money in the stock market. They like the money to sit and not lose value. You know, I'm not gonna judge. It's your money. Do what you want with that. Let's see here. Total asset. Look at this. It's crazy. 2.2 billion 2016, 2.3 billion almost like 2017. 2.3.5 billion a year ago, and then 2.4 billion. Like every year they make extra $100 billion. Just, I don't know, from fees or something. That's extra 100 billion. And look at the total liabilities. You want this to stay stable or go down. 1.9, 2, 2.1, 2.8, and 2.16. It's growing, but not too. I'm looking for this. I'm going to open total liabilities, deposit payable. I'm looking for long-term debt. There we go, right here. Long-term debt and capital. You look in this. Again, let's see the ratio. So we got 216, 227, 229, 240. Not a big deal, not the long-term debt. And Warren Buffett would like to see that the debt, the long-term debt, can be paid off in 4 years or less. How do we do that? We take this number 240 billion and divide it by the net income that we got the number in the description, not in the description, in the income statement. So let's do the calculation. So I'm taking the long-term debt 240 billion, divided that by the diluted net income. Again, 18 billion in here. Take this, divided by 18,013. And Warren Buffett would like to see a number of 4 and below, meaning that they can pay the long-term debt in 4 years or below that, and assumes that this is the net profit, then they will never grow ever again. If it's the number is below 4 years, that's a great number. So let's click enter and see what we got. 13 years. Well, they're probably a little over leveraged, and Mr. Warren Buffett bought it. You know, it's not perfect. 13 years. I don't like it. I don't like that. I'm not buying Bank of America because I like TD Bank. I don't like TD Bank. I have a credit union. But if I would buy a bank to hold, it would be TD Bank, which I will do a video probably in the near future. Probably a good time to subscribe, hit that bell notification so you won't miss any other videos, and leave a comment below which stock would you like me to do next. Please don't say Tesla. I got like 100 of those, and I will do Tesla or NEO or Palantir, and I will do those as well. Let's move on to the cash flow. Let's see what we got in cash. Let's see what we got. Bank of America cash flow. We're looking at a couple of things. Number one, operating cash flow is the money that comes in from the operation of the bank, loans, mortgages, I don't know, fees, whatever the money that the bank is making. That's the operating cash flow. If we look, 2016 it was 18 billion. 2017 it went down a lot to 10 billion. I don't know what they did, but then it went up a whole bunch to 40 billion. And year after that they went another 50% growth to 60 billion, and this year so far they're down to 42 billion, meaning people are not taking loans. Well, they take the PPP, but I don't think that they make a lot of money from that. Probably they do, but they went from 60 billion to 40, so back to 2018 level. That's where they are, give or take, as of today. People don't take mortgages, people don't take loans, credit card, everything just got stuck, and banks are suffering, but I assume that they still get the monthly, I don't know, fee, $4.95 or something. You tell me how much you pay every month for your checking. That's what you need to look for operating cash flow. You want to see a positive number, which we got, but it's not. It's going down. It went up for 20 billion in here and went down 20 billion. This was a rough year for Bank of America, and then maybe Buffett saw an opportunity. That's what I'm thinking. Let's move on to the next thing, which is investing cash. Next item that we got is investing cash flow. You want to see a negative number, and we do. But it's a big number, you know. 2019, let's start with the beginning. 2016, they invested like 60 billion. Investing cash flow, meaning how do you invest the cash, excess cash, into your business? Do you expand? Do you do whatever that you need to do to generate more money? Do you sell more credit cards? Do you sell more loans, more mortgages, all the stuff that the bank does? So they went from 60 billion, 50 billion, 70, 80, and now they just doubled it. And they went from investing about extra 10 billion a year, from 70 to 80. They went another 80 billion, from 80 billion to 167. That's a giant investment. And if you click just to see what happened exactly, for where did that money came from, you see proceed payment from federal funding. Warren Buffett is a very smart guy. I remember I saw an article, let me repeat this number. Proceed payments from federal funding, look at this, $55 billion compared to 13 billion a year ago. Almost 4 times more money from federal funding. Why? Because I think they are the ones who processing the up to $10,000 small business PPP loan. They get all the money, all the fees. And if the person doesn't pay or something, it's a federal grant. I don't know how it works, but Bank of America is going to enjoy, and they're already enjoying 55 billion. Warren Buffett is a very smart person. What we got here? Net investment purchase, just another. I don't know what they purchased, but they made a lot of money from that. And yeah, that's at the end of the day, crazy good. Finance cash flow is next. I mean, just crazy. So they got their money from investment cash flow. I don't know how they expand what they did, but they got $55 billion in federal funding. And that's the key. That, I think, is the key why Warren Buffett doesn't care about 13 years to pay off their debt instead of 4 years. He knows maybe this is just part one. Maybe there will be another PPP loan that the government will give Bank of America. I don't know, another 100 billion to process all those applications and loans. If you took a PPP loan for your small business, comment below which bank is processing your loan. I think it's Bank of America. I'm pretty sure I saw an article. It says Bank of America got this government contract. I got 50 billion government funding. That's crazy. Let's move on to the next one. Finance cash flow. I'd like to see a negative number. I see not only a plus, I see a horrible plus, but they're always in a plus. Finance cash flow, meaning they do a couple of things. Either dilute their shareholders by issuing more stocks, or it's not or, it's and. It's either this or both. Let's say, or they basically taking more debt or refinance debt or something like that. That's basically what they did. Plus dividend, but if the number was and a buyback, but if the number is a negative, then it's more buyback and dividend, and if the number is positive, it's more diluted of shares and more debt. And we got this. This was a very healthy company. Went from 53 billion plus to 3 billion. They did pretty good. Then Corona hit, and they got like 266 billion. That's not a good number. Not a good number to see. I think Warren Buffett is playing this game as a funding game. I think, I don't know, if 100 million people will get a loan of $10,000 government loan, and Bank of America is the one that is processing all those loans, then the government will give Bank of America a giant boost. I think he knows that. I think he analyzed not just the financials. I think he knows a lot more than me, that's for sure. And I think that's the direction. If they got 50 billion, 55 billion, maybe every quarter they're getting 55 billion or 100 billion, or this part one out of 2 parts, 4 parts. I don't know. I don't know the details. But I think this is the play instead of like forever Bank of America stock. Because it doesn't add up all the check marks that he's looking for. So let's see exactly what happened here. If you go down, issue of stocks, you see that diluted more share. Let's see exactly what happened here. And we got ourselves, as I suspected, issue of capital stock, meaning diluting more share, raising more share, more capital, diluting the shareholders. We got a number, 1 billion. It's a lot less than 3.6 billion, a lot less than 4.5 billion, but here it was nothing. So it's good. They still issue more shares, but not at the alarming rate. It's a good thing. And what did they do? He took on a debt of 48 billion, and they repay another debt of 45 billion. They just do another refinance, but I don't see anything major in here, because we got 52 here, 50, the same ratio. 48, 45, that's 3, 52, 50 is 2, 64, that's 11 billion, and 4 billion. So here they went from 16 to 4 to 14 to 2 to 3. So they're getting a lot better in the last 2 years with issuing of debt and repayment of debt. This is what I like to see, repurchase of capital stock. They did a buyback. They bought Bank of America. The management bought Bank of America stock, but not as they purchased before. This year, last 12 months, they purchased 15 billion, half of a year ago. A year ago, they purchased Bank of America 30 billion. Now they purchase only 50. It's a good sign that they did a buyback, but I would like to see at least 30 billion, if not more. Before that, it was 24. Before it was 12 billion. Before this, it was 5. So basically, last year was the greatest year for Bank of America. After in the last 10 years, I assume after 2008, 2009. And then Corona hit, and they just tried to, finagle, and I think Buffett is taking advantage of that, as he should. And we got the end free cash flow, 42 billion. We're down 20 billion from 60 billion. Look at this, went from 40 to 60, back to 40, but they went from 10 a couple of years ago to 60. In 2 years, they went from 10 billion to 60 billion. That means that they gave insane amount of loans, mortgages, credit cards, and checking fees. Mostly, most of the money comes from, to be honest, if you're a bank worker and you take a 30-year mortgage, you pay like 140%. extra. Just something to think about. Maybe I should do some videos about real estate as well. Free cash flow is down 20 billion. There's not a lot to go with this because, you know, the best number that I see is the balance sheet. If you go back here, that's massive, 2.5 trillion. They grow by $100 billion per year. That's just massive and massive. And the government funding that we see in the cash flow, in the investment cash flow, that's the best number that I've seen, and that's the play that I think Buffett is playing. Proceed payment, federal funding. Proceed payment, federal funds sold, and securities purchased under agreement to resell. Don't know what it means, but I assume it has something to do with the PPP loan. Let's go find the fair value of Bank of America according to Warren Buffett. I'm back in the Excel. I found the AAA bond yield for Bank of America at 3.4. Basically, once I hit enter, we're gonna find two things: the fair value of Bank of America as of today, and the price that Buffett will be a buyer, also known as margin of safety. Before I hit enter, guys, let me introduce myself. My name is Ziv, also known as Finance After 40. While I am new to YouTube, I have about 15,000 plus community members following me on TikTok. Same name, Finance After 40. And we also have Patreon for about 150 members. $10 a month. You can get selling options for income, crypto plays, and this link to this Excel where you can just put in the details just like I did, and value each and every company or stock company that you would like to buy and hold long term. So without further ado, guys, we're gonna find the fair value of Bank of America. Dam da da dam, da 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 dam. $23. $23. I said a month ago it was like 23, something like that. Then it went like 20-30% up, you know, in the last month, because everyone said, hey, Warren Buffett bought it in July, August. That was the message that I saw on the news, and then everybody just bought after him. They didn't buy in July, August. $23. The price that Buffett will be a buyer is 15. He wasn't a buyer at 15. He was a buyer at around 23. You know, it is what it is. I assume he's doing this as a funding play, like government priced, because he said he bought around July, August. So let's go to July, August. So this is the 6 months graph, guys, and look at this. This is exactly where he bought. Around July 7, something like that. July, August, it was 23.10. That's where he bought. And the second that he bought, look at this, it went from 23 to around 27. Went down back to 23 where we had another chance. We didn't do too much. I assume here we got the news November 4th when it was still 23 that Mr. Buffett actually bought in July, August, and we went automatically to around 28 where we are now at around 28, 29. So we should have, you know, people are... If you did this video by yourself and thought about Bank of America a couple of months ago, if you were a Patreon member, you just put the numbers, you would get the fair value of 23 when it was 23 and you had a chance to buy. Would you buy now? It's your call. Will it go up? Nobody knows the future. But the fair value is $23 according to everything that we see. And if I bring you guys any value, do a couple of things for me. Click the subscribe button, hit the bell notification. Comment below which stocks would you like me to do next. I hope I helped you, and I will see you in the next video. Thank you very much. Yeah.